The dollar keeps marching on. Welcome to Market Insight. I'm Ramzan Karimali. Well, the greenback continued its relentless rise higher today, heading for its fifth straight daily gain, fueled by higher yields and Donald Trump's election victory. The yen, the euro and sterling all came under pressure. But can the dollar bull run continue? Well, to help answer that and more, I'm joined by Francesco Pesole, FX strategist at ING. Francesco, thanks so much for joining us. So, will the dollar go even higher against its peers now?
I guess it depends a lot on what's the horizon you'd be looking at this stage. There is probably building consensus among market participants that the positioning picture is starting to look a little stretched for the dollar. So perhaps there is a relatively strong case for a correction in the dollar in the short term. However, I think it's quite significant what we saw yesterday in terms of the reaction after the US CPI. The dollar traded a bit weaker and markets really jumped heavily on kind of buying the dollar at slightly kind of better levels against all kind of G10 currencies. So I think there is a strong feeling that the approaching Donald Trump presidency will be very positive for the dollar under a number of aspects. Although if we look probably at the very short term, the picture is a bit more nuanced and we could see some kind of position-led correction.
Now, what could this all mean for central bank policy? Could you see the Fed changing course?
Well, probably not. The Fed hasn't really spoken about the dollar much and is not something they are particularly considering. I think one interesting point to make is the fact that Donald Trump historically doesn't like a strong dollar. And recently, in his latest campaign, has spoken about sort of governments being more connected in a way with what the Fed does. So we must remember that in less than 2 years, Fed Chair Powell's mandate will expire, which means that there is room perhaps for Trump to put someone who's a bit more aligned with his views at the head of the Fed, and ultimately perhaps seek a bit of a looser looser monetary policy to sort of take some steam off a strong dollar.
Now, could the strong dollar at the moment benefit the likes of, say, the Eurozone and the UK if we enter sort of an era of possibly higher tariffs under Donald Trump?
Yeah, I think that, if we look at it about a year ago or a couple of years ago, there was this kind of aversion towards having a weak currency because the main focus of central banks was really to fight inflation, and having a weak currency, if you're fighting inflation, doesn't really work very well. I think if indeed we are entering a period of global trade wars, lower trade volumes globally, the likes, especially I think the Eurozone, there's a very open economy that relies heavily on trade. But other European countries like the UK, I'm thinking about Scandinavian countries, especially Sweden, they may start to look a bit more favorably at having a weak currency, even if not changing it directly via monetary policy, because that is not part of the remit of those central banks really to deal with the currency directly. At the same time, it could be kind of a welcome secondary effect of having loose monetary policy.
Now, what about the likes of China? Could you see Beijing intervene to prop up the yuan?
Yeah, so our view is that entering this new era of kind of U.S. protectionism, we are in the camp of those who think that actually Chinese authorities will want to defend the yuan and prevent kind of severe rounds of depreciation in the yuan. And the reason there is that mostly we're thinking that China will focus on kind of continuing to support the yuan's role as a global currency, and in the idea of kind of financial flows into Chinese assets, obviously having sharp depreciations is very negative. So when the time will come to kind of choose between having obviously supporting exporters by a weaker currency or kind of supporting the financial broader system by having a stable currency, we think that Beijing will probably opt for the second.
And what about Japan? Do you think this could maybe make the BOJ decide to raise rates a little bit faster?
It's a possibility. We must remember that Japan still has the FX intervention tool to deploy. What happened last time they used that tool was basically they didn't really use FX intervention at the moment where the Japanese yen was selling off, but actually they waited for some positive input for the Japanese yen, and then kind of jumped in the market with FX intervention. I think the Bank of Japan remains one of those currencies that one of the central banks that remains most focused on the currency market. We are generally more hawkish than market pricing and consensus on the Bank of Japan kind of outlook for rates, and we actually think that there is a chance there will be a rate hike in December, and we think markets are underpricing that possibility.
Francesco Pesole from ING, interesting stuff. Many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.